Well, hi, good evening, traders. Tuesday evening, 4th of July, 9:12 p.m. Indian Standard Time, and well, the party continues for the Nifty for the fifth consecutive trading session. Trading at 19,458, it seems like it has no dearth of momentum. Momentum readings are intact at an all-time high across, and the strength is holding well across all the time frames. Yes, the 75-minute time frame seems to be slowing down a little bit, and one can call this a rising wedge in a rising market. This can lead to a bit of slowdown, but until and unless price proves that, it's better not to predict or preempt. So, bullish view, of course, based on the trend and momentum, but I'll add the word cautiously bullish to it because of the fact that we've got a one-way move and the short-term momentum indicators are stretched across the daily and weekly time frames. Any kind of a long trade or many of the long trades going forward might feel like we are chasing the market, and that's something that we would not want to do. So cautiously bearish. Bank Nifty, on the other hand, was positive, but it did face a bit of intraday choppiness. It did went up but couldn't sustain and slipped. At the beginning, there was a little bit of weakness in the morning, but overall, what we essentially land up for the day is a classic doji. A doji is a sign of uncertainty. Uncertainty is in terms of the previous trend. The previous trend happens to be positive or uptrend in this case, and so this is a sign, this is an evidence that prices are tired and it can consolidate. Well, any kind of a breakout of this nature can allow itself for any, let's say, meaningful throwback. 44,400, 44,500 should be the short-term support if we at all see any weakness going ahead tomorrow or the rest of this week. The first sign of weakness will be at least the break below previous day's low. So cautiously bullish here as well. Now, FMCG is something that I would like to quickly discuss today evening. One of the first indices to hit an all-time high with the auto, and as it continues to mark newer highs, the momentum indicators across short-term and medium-term are turning bearish, or in other words, negative, classical divergence kind of a behavior. However, the trend is exceptionally strong. But if I show you the CNX FMCG ratio chart with that of the CNX 500, that's moved into a downtrend, which means that over this period, almost 2 to 3 weeks and more so, the FMCG index, though making a newer high, is actually underperforming in terms of the CNX 500. So what does this mean? This means that if these divergences were to play out and leads to any kind of a slowdown, if we see any kind of a breakout failure, that can be an opportunity. But I think a lot of this holds with ITC and Hindustan Unilever. ITC is holding well. Hindustan Unilever is about to give us a breakout. So this will be definitely a very interesting and important space to watch out for the rest of this week. I hope you've traded well. Take care of yourselves. Good night.